Welcome to the Techno Fundamental Report for February the 23rd. Spec, C. The root word for spectacle or speculate is the word spec. The Latin word is speculare. But the most important thing to understand is speculation is an honest word. When we look at investing and so forth, I hear a lot of talk about, I'm a long-term investor and so forth. That's really not as honest as saying I'm a speculator, because everything revolves around speculation. And what you have to also realize is it's nothing more than trying to see what's coming. So I'll give you an example. This is Apple. This is 2002. Now, the market, as you can see, now this is the NASDAQ, this is that aggression index that I'm always referring to. And you can see it was on a very serious downtrend in '02. This was after the dot-com bust. The market actually bottomed in March 10th of 2003. So what we decided to do was to speculate on this company, Apple. You can see this breakout that took place in May, right at the beginning of May of 2003. So the main message is this: the market bottoms, you get into an uptrend, there's no rush. You can take your time, because the best stuff is going to start to pop up once you get into that uptrend. But until you get into a definite uptrend, you're not going to see a lot of opportunities like that. But if you remember, back in this period here, Apple didn't have the phone. They simply had Macintosh computers and the iPod, which was a music device. So the speculation was, are they coming out with a phone? Well, the market knew it. So if you were paying attention to the market, you had a good speculation. Kind of getting into the numbers here. New lows still anemic, only 2 yesterday. We need to see the new lows pick up before I can really feel that this market has put in a serious bottom. So let's take a look at the 5 indexes real quick. You can see here NASDAQ somewhat breaking down, going into a downtrend here. It's time to kind of be cautious here. We hope that this is the beginning of a bull market, but then again, this may be nothing more than a rally in a bear market. So we just have to just keep your eyes open. So you can see here on the mid-cap stocks, they've broken down above that upper moving average as well. So we're starting to see some deterioration in this rally. New York Stock Exchange, same thing, rolling over, actually breaking below the lower moving average. Here we have the small caps, again, breaking down below that base. Not looking that good right now. S&P 500, same thing. We're breaking below the upper moving average, breaking below the base. Kind of keep your powder dry right now. We do hope that this market has bottomed, but we'll just have to see. Now, volatility continues to look okay. As you know, this is a 50-day moving average on the VIX, basically in a downtrend. So volatility is not the problem right now as far as the market's concerned. Now, the aggression index, we're seeing somewhat of a rollover here, breaking down below that upper moving average. The other aggression index kind of holding up fairly well. So basically, maybe kind of pull your horns in a little bit here. Now, the problem is interest rates. You can see here back in October, we got up to over 4% on the 10-year Treasury. Currently, we're at 3.9. We got down to around 3.4, and you can see the uptrend. Now, also, oil prices continue in a downtrend. The financial stocks somewhat rolling over, but continue to be in an uptrend. Number of new lows, not a problem. We got 29 the other day. We've been getting an extended period of here during this rally that started at the beginning of the year. New lows have not been a problem. Now, this is a graph that's kind of troubling. This is a junk bond fund that we keep an eye on. You can see here it rallied when interest rates were dropping, and now it's coming down in somewhat of a severe downtrend here. In fact, it broke below the 50-day moving average, and it's also breaking below the 200-day moving average. So keep an eye on the junk bond fund. It's kind of telling you that the market's worried about interest rates and recession. Same for the government bonds. You can see here the government bonds, which is the TLT. This is a bond fund of 20-year treasuries. You can see the rollover, the breakdown. Interest rates continue to be the problem here. So speaking of speculation, This is a very speculative opportunity, but it could be interesting. This company is called Inspire Medical Systems. They make a product, you've probably seen it advertised, that's designed to replace the CPAP machine. So if you have sleep apnea, which it's a big problem for a lot of people. In fact, I suffer from sleep apnea. I hate the CPAP machine. So this would be an option for me to go have this procedure. Now the company, the reason this is such a speculation is, if you look at the numbers, the company is, it's losing money. It's not making money right now. However, their revenue growth in the most recent quarter was 76%. So if you really start looking at the numbers on this thing, you realize that if they just get a small percentage of the CPAP market, it could be a really big deal. Now they've got plenty of cash. They got $451 million in cash. They got a little bit of debt, not a big amount. The debt to equity ratio is pretty darn low. Current ratio almost 9-to-1. They've got plenty of cash, and they have positive levered free cash flow. So it's a solid situation. They're just losing money, mainly because they're trying to spend a lot of money opening clinics that will provide the surgical procedure required for this device. So if you have any questions, let me know. Thank you very much.